How you doing, everyone? Welcome to an episode of the Best Real Estate Investing Advice Ever show. We're doing it live, obviously, via Facebook Live, and we're looking forward to hearing your thoughts and talking to you. If you have any questions, then respond or reply below, comment below. Be happy to get to the question either today or on or next week's episode. Theo, my friend, you ready?
Let's do it, Joe.
All right. Best ever listeners, how you doing? Welcome to the Best Real Estate Investing Advice Ever show. I'm Joe Fairless. This is the world's longest running daily real estate investing podcast. We only talk about the best advice ever. We don't get into any of that fluff. And today we are doing Follow Along Friday. We have a fun conversation that will be helpful for investors who are considering raising money from other investors to buy deals or continuing to use their own funds. So that's going to be the main part of our conversation, pros and cons. We're going to do a little role play action, and Theo is going to talk about if he should or shouldn't, and I'll take the opposing view. And then we've got some miscellaneous updates and some helpful things for you also. So how do we want to kick it off, Theo?
I say we jump right into our little mock debate. And so as you said, I am someone who's supporting the side of syndicating, and you're going to play devil's advocate and be the person who wants to continue using their own money, and we'll go from there. So I think the biggest reason why syndication is superior to using your own money is just the fact that you can do a lot more deals and a lot larger deals by raising your own money. I mean, there really is no limit to how much money you can raise, and there is a limit to how much money you can save to buy your own buildings. So for example, if I wanted to buy, let's say, a $10 million deal, right? If I was going to use my own money, unless I had some family money or an amazing job or won the lottery, it would take quite some time to save the $3 million required to fund the deal. Now, obviously, you could potentially do some sort of creative financing and get in for lower, but in that case, you'll probably be over leveraged, which is something we like to shy away from. Whereas if you are wanted to buy that same $10 million deal, in reality, you don't really have to have any of your own money to do it, as long as you can raise the money. And obviously, you have to have the capability of raising the money, but we can get into a second. Just the sheer fact that you can do a larger amount of deals and larger deals in themselves based off of using other people's money versus having to wait, months or years to save up your own money is one of the main pros in my book.
Yeah, I agree. And for the purpose of this conversation, is this we're talking about the general principle of it, obviously, but then also can we talk about you specifically? Because I think if we get more granular with you in particular, that way we can draw some parallels for other, best ever listeners who might be in a similar situation.
So here's a perfect example for me. So right now, I obviously use my own money to buy deals, and it's kind of one of those things where I can find as many deals as I wanted to. I could do all the upfront work. I could study the market, but until I have the actual money to buy a deal, then there's really nothing. My hands are tied. I'll get into this in my updates, but I'm sending out a direct mailer right now, and I'm getting a lot of responses, but I can only buy one of those deals myself with my own money, and the rest I have to wholesale, let the real estate agent just represent them. But if I was able to raise money and syndicate the deals, in reality, I could take on all of them as long as I'm able to find the money.
Mm-hmm. Yep, that is a good point, and I don't have anything to counter that. You're right; it's a more scalable way. Well, I guess one thing I will say is, let's talk about how you scale. You scale by bringing in other business partners. How on a scale of 1 to 10, how much do you enjoy having phone conversations with people? If I were to call you up and say, "Hey, let's chat," how fun is that for you?
I mean, I guess it depends on what we're talking about, but if we're talking about something that's completely random, but I enjoyed probably 8, 9, depending on what time of the day it was.
Really?
But I enjoy phone conversations. Yeah.
Oh, wow. that surprises me, but that's a good thing. Okay. What about emails? What about responding to emails?
I'd rather do a phone call than emails, just because emails kind of take a long time to get your point across. There's a lot of back and forth.
Mm-hmm.
But if someone asks me a question on email and right when I see it pop up, I'll usually just respond to it right away.
Cool. Well, I mean, I will say that you will have more phone calls. So you'll be in your personal nirvana because of that. You just love phone calls, which is something new I just learned about you. And you will receive more emails. But in this this does go back to the pro side of syndicating. I'll tell you from my personal experience, and I have $90 million worth of investor dollar. I'm not exactly sure how much, but somewhere around 90 to $100 million worth of investor funds that have been invested in our deals. And I don't receive one email a day on average. It's much less than that because we do regularly, scheduled monthly updates. I mean, I probably get 1 or 2 emails a week, maybe. And right now it's around, K1s when they'll be sent out and just the timing of that. So, and for anyone listening who is an investor by the 31st or earlier via secure email of March. So, you will have more, but if you're performing and you're communicating regularly, then it's really not a lot at all from an investor communication standpoint. But as you know, because you helped me put these monthly updates together with our investors, there's work involved every month that you wouldn't have otherwise, because you don't have to report to yourself when you've got your own properties. When's the last time you emailed yourself a status report, right?
That's pretty funny. So I'll give Marcella some status reports just because she's not involved in it at all. So it's not involved as for the larger syndicated deals, but once a month, once we get the profit and loss for the month, and if there's any type of tenant issue, turnover, we're raising the rents. But it's something we just kind of do over laying in bed at night. It's not like a formal meeting or anything.
Yeah, man, that's great. And that's something to consider and to implement if we're buying our own deals with our own money and thinking about doing a syndication later, is to get in a habit of doing those updates to a significant other or to someone else. That way you've got it ironed out versus starting from scratch. Okay, then you're good on that. I'm good with you on that front.
But something else that's so that's another I guess pro for doing a syndication over an apartment deal is, yes, there is more work, but like compared to the amount of work you're going to be doing regardless, it's really not that much, especially if you're doing investor email updates once a month. And obviously you're not going to have like 10, 12 deals right up front. You'll have one deal that you're talking to your investors for, and that email might take maybe an hour a month max. And then, maybe another, let's just be generous and say 5 hours a month responding to emails, compared to all the time it takes to create your team, to find the deal, to underwrite the deal, to do due diligence, to do the ongoing property management, or the ongoing asset management, regardless of even money, or if you're using your own money or someone else's money. The only difference is you have investors you need to communicate with. But again, compared to the overall amount of time you're going to spend on the entire process, regardless, the benefits of all the benefits of larger deals, being able to do more deals, and the other benefits of syndication, I think far outweigh the little added extra time you have to do putting together some emails, especially since you only have a couple of deals at first.
Well, then let's talk about something more foundational and something that is, in my opinion, the most important consideration point assuming that you're qualified to do this, which we haven't even talked about in this conversation, but we will. But it's assuming that you're qualified, which Theo, I believe you are, but assuming people are qualified to do it, and we'll talk about that here in a second. The most important thing to account for is that you are now responsible for someone else's money. And your relationship with family and friends when they invest will forever be changed. Forever. You won't have the same exact relationship that you have had with them previously when they invest with you. You just don't, because you are business partners now. And when you're in business together, there's a shift in the relationship. And that's something that's not talked about for whatever reason, but it should be, because when you invest with family and friends, then there's now a different level of commitment that you have towards them, but they also, there's just a shift in the dynamic. It shifts slightly towards more transactional in nature, as it should, because you're partnering on a deal and you're overseeing the deal. So they want to make sure that their funds are being invested wisely and the business plan's doing well. So when you invest when a friend invests with you, no longer will you go to dinner or go play video games or have drinks or go whatever you do with your friend. No longer will you just do that. You will also have a conversation about the business, or if you don't, just know that it is on their mind and as it is on your mind. And it just changes things. And that it's good if you're doing well, but if you don't do well, or if there's a challenge or a dip in occupancy or whatever it is, then just know that your relationship, it's just going to change. I've got really good friends who invest with me, and it's a little I don't know, terrifying is kind of, I'm always just terrified that we're not going to do the right thing. So that pushes me to go above and beyond, and our team to go above and beyond to make sure we are doing the right stuff. But the word that I think of is terrifying, because I'm terrified to do something wrong with the investment and their investment dollars, because I don't want to hurt or negatively impact our relationship at all. And if, assuming that someone's not a sociopath, then they're also going to have that type of feeling or some degree of that feeling. And you don't have that dynamic is not in place when you're just working, on your own deals. But when you start bringing in partners, there's a different element from a mental standpoint. And you certainly could argue that then pushes you to do better than what you would if you had your own money, only your own money in the deal. And I think that's a valid argument, because I think we perform better. We invest alongside our investors, but investors invest in our deals, and I think we perform better than if we just had our own money in the deal. But it's something that you've got to be comfortable with, because if you're not, then that can negatively affect how your relationships with those individuals, and it could also negatively affect just the overall plan.
Yeah, and it sounds like it's something that once you overcome it in the beginning, it's not necessarily, it kind of reduces, but doesn't completely go away. It's always that, like, in the back of your mind. But something that you told me, or that you did in one of your videos, one of those YouTube videos about, can I raise money if I'm not good at sales? And your response to that was, stop being selfish. And instead of focusing on kind of what you're explaining right now, is one of the main reasons why I don't syndicate deals, because I terrified's a good word of using other people's money, and just kind of my ability to actually raise the money in itself, kind of those two things combined. But as you said in that video, if instead of kind of thinking about it in from your perspective and getting in your own head and think about what can go wrong for you, or just kind of go wrong in general, you were saying how what you would focus on, or what you recommend you focus on, is how by raising money and allowing other people to invest in these stellar deals that you find, you're helping them achieve their financial goals. And once they achieve their financial goals, they can do whatever they want to do in life and just be happier people all around. They'll probably give more because they'll have more money, and just kind of the positive impact it'll have on people's lives by you helping them reach their financial goals. Whereas if you're just investing by yourself, maybe you yourself will do all that stuff once you reach your goals, but it's not really impacting many other people at the same time. Like, you're impacting people on your team and the residents that live there, but the added layer of bringing in investors who may be investing in the stock market and not getting as high of a return as they could if they invested somewhere else. They just don't know. And something could go wrong and you lose your money. But as long as you have the right team and have everything in place and the deal goes well, then they'll make way more money than they would be able to make anywhere else. And then obviously, from your perspective, you help them out, they help you out, and it's kind of like a cyclical relationship where you're both kind of riding up to the top together, as opposed to me just doing it by myself.
Yeah, I agree. It reminds me of the quote Zig Ziglar said. He said, help enough people get what they want and you'll eventually get everything you want.
Exactly.
And it's true. And, Robert Kiyosaki, when I interviewed him, he talked about the richest people in the world build a network and everyone else looks for work. And it's true. It's the same approach. Both those quotes and what you just said. When you help and when you partner with others along the way, especially with real estate lends itself really well towards partnerships. I mean, that is a true business, or a business that really is naturally built for partnerships. Then it's helpful, but it is a consideration point, and that ties into, in order for us to want to help enough people to get what they want, and we'll get everything we want, and to partner with investors, we need to have two core things before we get started in apartment syndication. One is a track record in either business and or real estate. And two is the education that is necessary for us to be, prudent financial stewards of investor dollars. So from a business track record, what is your business and or real estate track record that would qualify you?
Well, I'm in very good shape on the business end. Not necessarily me, but my business partner, aka my wife. She manages, I don't even know how much, but it's almost nearing $1 billion worth of sales at her company, and she's had a ton of promotions at that job right now, and so I'd be able to leverage her her business experience for sure on that end. In real estate, I mean, personally, I've got my 13 units that are cash flowing now. I just obviously I've not had them for a year yet, but they're doing really well. I've taken a deal full cycle where I bought it, rehabbed it, and sold it for a profit. But I think more importantly, in regards to syndicating, I think it would be in a couple of months, I can tell them that I co-authored a book about the entire apartment syndication process. And I think that in itself would probably speak volumes to people. I mentioned that at my meetup group last night, which I'll get into a little bit. And they're all like, wow, that's crazy. Like, I want to learn about syndication from you. So even though I haven't necessarily done a syndication myself, I've created a syndication cash flow calculator. I've helped you with your consulting program. I work for a guy who controls nearly $300 million in apartment syndications. And so it's not necessarily, I mean, some of that is my experience, but some of it is also, and I'm sure this might be what you bring up next, but this the relationships you have and making sure that you're surrounded by people that do know what they're doing, that if something were to go wrong, or if you were to have some sort of question, you have someone to go to instead of having to kind of scramble and figure it out by yourself.
Yeah, absolutely. And so clearly you check the boxes. I mean, what we look for, what any best ever listener who's thinking about going from their own money to partnering with others, what you'll want to have in place is a track record of accomplishments professionally, or a track record of being successful in real estate. Now, how do you find success? Subjective. It's up to you. Well, actually, no. Ultimately, it's up to the investors who are investing with you. My recommendation for defining success is doing something that having some sort of real rental portfolio currently. That's important. That you have at least a couple properties in your portfolio. But again, if you don't have that, but say you are a medical sales device professional who's been promoted 5 times in 3 years, and you have risen to the top of your department, well, there's something to be said with that. Plus, it's likely you're a pretty savvy individual who can pick up the education piece, which is the second part that we're about to talk about. So while you're not ready yet, once you get the education, you will be. So first is the track record, and then the second piece is the education. Theo, you combine both of those in what you were saying, with you're writing a book with me on how to do this. So clearly we're writing a book on it, so you know what you're doing there. So from an education standpoint, ultimately it's, do you know the process from start to finish? And are you able to effectively underwrite a deal and show that it will make money, and then have the resourcefulness to put the partners on the team to help you execute on it? Because one of the main challenges people will have when you start out is lack of credibility, and you can't create years of experience that you've had if you haven't had it. So you have to leverage other people's years of experience. So you mentioned, when you were talking about your background, you mentioned working with me. So leveraging my experience is beneficial for you. But when you have a deal, leveraging my experience will be an okay talking point. But if I'm not investing in your deal and I don't have money in the deal, then it's just a talking point. So really what you would do is you'd partner with someone who has that experience and bring them in on the general partnership side. And then they would be able to have a stake in how well the project does or doesn't do, which shows alignment of interest. And that we've talked about that before. It could be consultants, property managers, brokers, other investors who own property in the area, any number of people. Yeah,
because I would say the one thing that I would be lacking in right now, which obviously is access, not access to capital, but just the verbal commitments to capital, would be like the team. I think I don't have a broker, I don't have a property management company, but again, I think based off of my background, that wouldn't be too large of an obstacle to overcome.
Yep. Yeah. So those are any other points that you wanted to mention?
I just wanted to mention one thing in regards to actually raising capital, just because we haven't talked about this before, but I have a meetup last night, and someone that was in attendance, his name's Matt Nesbaum. I hope I'm pronouncing his last name right. He actually has a podcast, The Corporate Investor, and he was mentioning how he's starting to raise money. And one of the techniques that he's had a lot of success with is he will go onto his LinkedIn. So obviously he created a list of all the people that he could, he remembers from memory in an Excel document, and then kind of called all of them up and just mentioned what he was doing. Obviously he's not selling a specific deal. He's just mentioning, hey, I'm starting to raise money for deals. If I find a deal that, kind of ask what their goals are. If I find a deal that matches your goals, would you be interested? But then on top of that, just because his list wasn't long enough, or he just wanted to find more investors, one of the two, he went on LinkedIn And, we all have a bunch of LinkedIn of friends and followers. I'm not sure what they're called on there, colleagues, right? And maybe there are people who went to college with, or people who went to high school with, or we grew up with. Maybe someone met at a conference a couple of years ago that we haven't talked to in a long time, but there's some sort of relationship there. And so he'll find that individual on LinkedIn and then send them a private message, kind of using the same messaging that he'll use in the call. And he said that for every 5 people he reaches out to, one person will respond with interest. That's a 20% response rate. So if you take an hour a day or half an hour a day and try to message 5-10 people, then each day you'll get 1 or 2 potential people that would be interested in investing a deal if you got there. So not necessarily related to the pros and the cons, but just a strategy that I heard last night about how people are having success finding verbal commitments. Because kind of, as you said, getting over the fear of raising money, but then also actually being able to do it are probably some of the 2 biggest hurdles. And so that's just one solution out of many. We've got plenty of blog posts on how to raise money on the Best Ever blog. And we've got them all set up by categories now. So you can just click on the raising money category, and there's over 30 or 40 posts that are just all about people raising money for deals.
I did that whenever we on our first Ashcroft deal, because things have done a 180. I don't proactively reach out to investors or potential investors anymore. It's more, we do all the stuff that we do, and then referrals and things like that come to us. But on our first deal, a property, a 250 unit in Houston, I did not have all the funds that we needed to close. So I had to get really resourceful, and I started messaging my colleagues on LinkedIn. And since the property was in Houston, and I'm from Texas, so I have a lot of colleagues in Houston who live in Houston. And I messaged 60, all of them, however many I had colleagues in Houston, and I'd write a personal message and I talked to them, or I sent them, just a sentence or 2 about what we were working on, and then asked to, if they wanted to talk further. And I didn't get any investors from that, but it was a different ask from what you're talking about. I love that approach. But I just wanted to mention my story because of how resourceful and just, we got to do what we got to do. And turns out that deal has, we bought it for $14.1 million. We put in $2 million, and then about 16 months later, it appraised for $21.6 million. So our investors have received over 60% return on that. So props to everyone who invested in that, and glad we did it. And those Houston investors who I reached out to, you should have invested.
Yeah, I was going to say, they're probably feeling salty right now.
Yeah, exactly. But it's LinkedIn's a good tool. And sometimes just got to be resourceful, and I love what Matt's doing.
So we did have a question about syndications. We've got 2 questions. I think we can probably answer them pretty quickly. But Darren asks, what are the costs of raising money? Lawyers, regulations, etc.
Lawyers, regulations, legal documents. I'm going to assume you're doing a 506B as in boy offering where you cannot publicly advertise, because if you could, that would be another cost. Legal documents and the other items. It depends on if it's your first deal or not, because you might have some cost efficiencies if it is your second or after that deal, 20,000 or so.
Okay.
And that's paid at closing, so it's not out of pocket. However, if you don't close on the deal, then obviously it is out of pocket.
And then the second question was by Robert, and basically he wants to passively invest in deals, but it doesn't. It has several $100,000 in liquid cash, but it's not an accredited investor. and he wants to know how he can passively invest without being an accredited investor.
Well, there's something called a sophisticated investor, and that's someone who I'm looking at Investopedia right now. They define it as someone who has sufficient investing experience and knowledge to weigh the risks and merits of an investment opportunity. I don't work with anyone but accredited investors, but there are a lot of syndicators who work with sophisticated and accredited investors, and also even non-accredited investors. I would find someone who works with, assuming that you are a sophisticated investor, I'd find someone who works with sophisticated investors. I know there's some crowdfunding platforms that you can invest regardless if you're accredited or not accredited too.
All right, there you go. So I think that was a good debate. I think a lot of valuable information was added there. And again, the more and more I have these conversations about syndications, the more and more I want to do it. So I might, in the near future, we might be able to kind of go into even more details on maybe my first syndicated deal. But again, that fear of raising money is something that I still have. But I think as I get more education and more experience just in real estate in general, I'll have the confidence to do that. It is so strange that I think I have no problem investing my own money, but which is going to affect me way more than someone else's money. But I think that's just human psychology for sure.
Yeah, the funny thing is, I believe the last statement's incorrect though, because when you invest with your money, it's your money and that's it. When you invest with other people's money, you're likely investing alongside with them. So not only are you losing your money, but you're also losing other people's money. And then if you do that, a bad domino effect would occur. So,
something to support what you said earlier about using other people's money will make you like go above and beyond what you might have done with your own money. There's a study. I think this is the same psychological mechanism is happening, but the study would basically where people are more likely to give their dogs medication than they are to take medication themselves. And so if they have some sickness and they're given medication, the chances of them taking it are less than if their dog has some sickness and they're the medication for their dog. So in other words, they take care of their dogs more than they take care of themselves. And so I'm sure that can apply to other people too. People are for some reason want to take care of other people more than themselves. Another example is people give advice to other people that we ourselves don't necessarily follow. So I do totally think it's true that if I were to just kind of jump in and start using other people's money, that the fact that I am afraid will drive me to not mess up, because obviously I don't want that fear to be true. I'd much rather it be kind of pretend in my head.
Makes sense.
Good stuff. So just a few updates on my business. So I did host my first meetup last night.
Congrats.
You are incorrect about the number of people that would show up. So I had I had 13 people, or I had 14 people RSVP, but Marcella dropped out last minute because she forgot she had a work dinner, and so those 13 people that RSVP'd and 11 showed up.
All right, that's really good.
So I was surprised. I was like,
yeah,
I'm sitting there.
That's just like if they were paying $2.50 like they do at mine in Cincinnati. So that's great.
Yeah, and one guy drove all the way down from Fort Myers, which is like a 2-hour drive. Not for the meetup specifically. He was here for other reasons, but he stopped by. But it was a really good time. The majority of the people there either haven't done any deals yet, or have kind of done a deal where they did a live and flip, but they're all interested in learning more. The most experienced guy had currently owns 32 doors. I think he just bought a 20 unit, and then he's got 32 single families that he's going to sell off to buy more properties. And I think my favorite guy is a YouTuber who talks about cryptocurrency. He wants to use his cryptocurrency winnings to invest in real estate.
Okay,
but
I think there was a condo for sale in Miami for Bitcoin only. I read that a month or two ago. Yeah.
So yeah, I'm just kind of mimicking the approaches I've talked about in the past, and going to try to kind of just keep growing it. I created the meetup more for accountability purposes for myself because I want to, I'm kind of mimicking the best ever meetup where I create a Facebook group and people go there and post their goals. And I figured, if I'm posting my goals on there and I don't meet them, and I'm the guy that's running the meetup, that's not going to look too good on me. So I'm going to have to actually accomplish these things. And I mean, it was a really good time, and I'm looking forward to doing it again next month. I'm not going to do the weekly meetup just because I had a conversation with the people that were there, and no one was interested in a weekly meetup at all.
Yeah.
So we'll just do monthly and kind
of. You made that good of an impression on them. They don't want to see every week, huh?
Yeah, seriously. That's disrespectful to me.
Well, I'm excited to hear about the direct mail success.
Oh yeah, so I sent out the direct mailer, and my agent called me on Tuesday afternoon and said, no, I'm sure she might have been exaggerating a little bit, but her phone blowing off the hook, and she was really surprised because she did not expect to receive any phone calls, and she didn't expect to get any calls until the next couple of mailers. And right before we hopped on this call, she sent me a document with the not necessarily the people that have called her, just because there's still some back and forth going on there, but the people that are interested in selling. And so there's actually three people that are interested in selling their properties. They're all fourplexes. They're all in the neighborhoods that I want. We just need to get obviously some more information on the financial situation and get in there and actually see them. Some of the people are like, oh yeah, I want to sell, but you can't like come in and see it. I'm just like, well, that's not really going to work because I'm not going to offer you a deal, especially after all the horror stories I've talked about on my fourplexes in Cincinnati. People that don't know, Cincinnati homes are like over 100 years old, and so they're all they might have cast iron pipes, boilers, boiler problems, radiator problems, things like that, which are very expensive. And I know that firsthand now. So I definitely want to get into any building before I put in an offer for sure. But it's really, I'm really excited.
That is. And how many total mailers did you send out?
I think like around 450.
Okay, got it.
I didn't filter them the best because I mailed to all the 4 to 19 units, and so someone reached out with like a $1 million property, which I obviously can't take down myself. But the wheels started churning up. Okay, well, is this an opportunity to attempt to raise money for my first deal and syndicate it?
Maybe you partner with Matt, the guy who you mentioned earlier, who's doing the LinkedIn outreach.
There you go.
Sweet. Well, congrats on that.
Yeah. So as long as maybe in like, I don't know, maybe in a couple of weeks from now, I will kind of figure out exactly how many responses I've gotten. That way I can tell everyone what the exact, more specifically what the response rate was.
Mm-hmm.
Yeah.
I know you'll have the numbers. Looking forward to that. Let's see. The big news on my front is that we were awarded like less than 48 hours ago a new deal. So very excited about that. And for all of my accredited investors who are listeners of this podcast, you have not received an email from me about it because we are putting together all the information about the deal, and that will be sent out in about 2 weeks or so. So really excited about this off-market deal that we were awarded. It's in Fort Worth, and more details to come once we, one, officially have it under contract. We're working on the PSA, purchase and sale agreement, right now. And then two, once I share it with my investors, because I want them to get the info first. So excited about it.
Can you mention how you guys actually found the deal? It's off market.
Yes, yeah, it's through the owner of the deal is someone we've had previous deals with. So we have a relationship with the owner of the deal. And they enjoyed working with us on the last one. We enjoyed working with them, and that one has gone very well. And this is a similar model.
Awesome. Well, congratulations on that. And it kind of shows again the power of the network.
Yep. And leaving things when you do a transaction, leaving it on good terms where everyone feels good about it. are great about it, and then, builds for future stuff.
Absolutely. All right, so just a couple things to wrap it up here. Make sure you guys go join the Best Ever Show community on Facebook. And
what's the URL?
Bestevercommunity.com. And we post questions on there weekly. This week, we're going to do something a little different. So the question right now is, what is your biggest obstacle keeping you from starting real estate investing or scaling? So if you haven't started yet, what's holding you back? If you're maybe in a similar situation to me, what's holding you back from scaling? And then based off of those responses, the next week, we're actually going to provide you some solutions on what you can do. So we're nothing too, we're not going to go into crazy detail. We don't want the blog post to be 20,000 words, but we'll kind of give you some hints, maybe link to some other blog posts that we've already written or some podcasts that we've recorded, just to kind of help you overcome that obstacle. So I think, I would make sure once you hear this, go on there and post your response as quickly as possible, because I'd like to at least create the blog post of what the actual responses were by tomorrow afternoon, and then next week we will provide solutions. So if you can't get there in time, I'll check back on the thread just to see if there's any other responses that want response.
Sweet. And hopefully we'll have that post pinned at the top of the group. That way it's easy to find for everyone to go who goes to bestevercommunity.com.
And then finally, just to conclude, as always, make sure you guys subscribe to the podcast on iTunes for your opportunity to be the review of the week. We got another amazing review this week from Harrinder, and he says, "A must listen" is the title.
He or she?
I'm not sure. He or she. We'll go with that. I'm not sure. He or she says, "I'm very grateful to have stumbled upon this podcast. I own 2 businesses, a commercial cleaning company and a wedding photography business. The information I learned from Joe's podcast is absolutely incredible. It is real estate focused, which is something I'm very interested in, but the content that I received from all of his experienced and successful guests have provided me with the gems that I can apply to both of my businesses. Joe is like a podcast surgeon, dissecting his guests with precision questions and getting all the valuable information out of them without any of the fluffy stuff. Or the hundreds of $1,000s in medical debt too. I highly recommend this podcast, and I'm very grateful that it exists. It will grow and inspire you. Joe and Theo, you guys rock. Thank you so much for putting out such valuable content." That's a really good review.
What a wonderful review, man! Thank you so much for that. And I think you have a 4th business after you start real estate investing. That will be 3, and then the 4th is being a writer, writing a book or something. Wow, you got a talent for writing. Well, thank you so much for that review. And Best Ever listeners, if you want to help grow the community and help us get better guests, or continue to get, all those other guests are terrible. No, to continue to get high quality guests is what I should say. Then please leave a review, and that helps future guests that we speak to, attract future guests that we speak to. So thanks so much, and everyone have a best ever weekend, and we'll talk to you tomorrow.